Hi, Ben Kingsley here, part of the More team, and today I'm talking about beating the banks, really, which is about getting the best deals on your mortgage. The more information and knowledge you have about how the banking system works and basically how they structure their deals and where the competition lies is going to be all about what these video lessons are about. Now, this is all part of, when we're talking about the More platform, we're talking about a series of educational videos and lessons that we've been putting together under the banner of Don't Leave Your Money on the Table. Now, why is this important? Well, if you think about it, what I want to teach today is about all of the tricks of the trade when it comes to the lending market. Now, if you have that knowledge, remember, knowledge is empowering, but only if you act on it. I want to basically be able to give you the tools. So today is about moving through those series and all of these different video lessons in terms of what we're talking about. Now, you might be saying, well, why is that important? It is super important because when you think about your mortgage or even your investment mortgages, they are some of the biggest money out, the biggest expenses that we have as part of our family budget. So we need to make sure that we've got our mortgages at the sharp end of the price bus and that they're competitive, because if they're not, we're leaving money on the table. And that's what I want to basically talk to you about. I'm going to show you a couple of examples of where we may be leaving money on the table. So here's a good example here. And what I've done is I've compared two $500,000 mortgages over a 30-year loan term. And you can see I've cut out all the other costs, so no upfront fees, no monthly fees, just to give you an illustration in regards to what 5.25% interest rate versus a 4.95% interest rate can do over that time period. So all of the things being equal, we can see that there's $33,000 in interest that could be saved as long as our mortgages remain competitive. Now, I'm saying obviously 30 years is a long time, and as you'll learn through this series, I'm really interested in identifying opportunities in the next 5 years and also making sure that your mortgage is competitive, which is usually around 3 to 5 years that you'll start to consider, shopping your mortgage around. But that's one step in the dance. So just remember that number. Now, that's 30 basis points difference between those two. Let's have a look at the next slide here and we can see why this also becomes quite valuable for us. Let's say we did pay those additional rates. So let's say we did make repayments that were higher based on that higher interest rate. So in this particular case, I've got the $500,000, 4.95 over that 30-year period, but I've saved $100. So I've been able to save that $100, which was the difference between that 30 basis points. And now I'm paying $100 extra either into my offset account or off the mortgage. And I've been able to then save another $41,000 in terms of paying that loan off. There's 2 years and 4 months in getting that loan paid off quicker, which will result in another $41,000 of interest. So you can see here there's two components. The first one was, okay, let's make it the cheapest interest that we can possibly pay. But if we did save that extra $100, let's put that $100 into the mortgage or into the offset in most sophisticated ways in which we do things. And we can see that we've combined $30,000 and possibly $40,000 to get an overall saving of around $70,000. Now, I don't know about you, but for me, $70,000 is a material number. And if you think about the whole premises of these courses of not leaving money on the table, that's why it's really important that we understand, firstly, we save our money, and then secondly, how do we put that money to work, which is what we're passionate about on the More platform and also through the Property Couch and the work we do in our advisory business as well. So some really interesting things to consider here as part of that story. And that's where I'm going to leave the introduction, and then let's head back into what we want to talk about in terms of the different lessons and start to think about what are we going to cover in these videos, these video lessons. We're talking about beating the banks and making sure we're getting the best deals. So we're going to be covering off on how the banks profit from their mortgages. Also, we're going to look at the problems with comparison rates. They aren't perfect as a way to assess the cost of your mortgage. Lenders go on sale. There's a big story there to be had Published rates are negotiable. Lots of insider knowledge to be shared there as well. Discount rates are misleading. Loyalty tax. Yep, there's a loyalty tax that a lot of people pay, so I want to share with you what that is and give you some examples of how they treat existing customers versus how banks treat new customers. Then we've got the bank retention teams. How are we going to deal with those bank retention teams? And then finally, we're going to look at all of this and bring it together, because there is a fair bit of complexity in that in terms of how you go about mastering this, or whether you need some professional help to get the best results for yourself. So let's firstly start. I'll bring this across now, and we'll start to have a look at the first item, the first lesson. So the first lesson for us, I'll just make sure I move that into play. So thanks for watching that educational session. As you know, I'm passionate about this stuff, and I really do want to see you take action. Now, whether you do that yourself, that's fine. But if you do need help, I am super proud of our mortgage team here at Empower Wealth, and they would love to help you. They are helping thousands of people every year, just like you. They're multi-award winning. We've won customer service awards and national awards for the work that we do. So I know that they will be able to look after you. So leave your details below, but please make sure you do something with this information and knowledge that you've just learned about. Now let's get into the next episode.